guys. Time is around 9:22. Let's look into today's Bank Nifty as well as Nifty 50 analysis. First, let's look at Nifty 50 trade analysis. You can see clearly today the market actually gapped up, and it gapped up around 150, around 100 points, and it gapped up about 200 moving average, clearly signifying bullishness, guys. But you can see yesterday, if you try to see what happened yesterday, you can see the market showed some kind of bullish momentum during the first half of the period. And during the second half, the market clearly broke towards the downside, clearly signifying bearishness. But if you try to look into today's analysis of Bank Nifty, Nifty 50, you can see yesterday's the market, today market gapped up, faced rejection from this 50 level. You can see this is a golden zone ratio where yesterday sellers might have entered the market and aggressively sold towards the downside, clearly signifying bearishness, guys. You can see the market has targeted sellers over here, here, but the main players who might have sold here might have already been in profit. So to target all those sellers, the market had gapped up, or in case if the market sentiment would have been bearish, the market would have gapped down. But you can see the market here, in case if the market gaps down, there is no one to target, because you can see here there might be sellers, here there might be sellers, here there might be a lot of sellers, might be still holding. To target all those sellers, the market gapped up, faced resistance from yesterday's 50 level, and you can see clearly the market gapped above this 200 moving average, the blue color line over here. And in case if the market sentiment would have been bullish, guys, the market would continue further towards the upside and take support anywhere here and continue like this. This is how the market sentiment, in case if the market sentiment price would behave, in case if the market sentiment would have been bullish. But you can see first we'll try to plot the middle of the first candle as well as 5-minute zone as well. And after plotting 5-minute zone, we'll look in case if the market is trading above this 5-minute zone or below the 5-minute zone. And you can see first rejection of price from this 50 level, and market clearly broke down the 5-minute zone as well as the mid of the first candle. This is another significance for market to be bearish, and you can see there might be high chance that the market might take support from this 200 moving average and further continuing towards the upside. But you can see as this doji formed, a lot of buyers might have entered, expecting the market to go higher, but all those buyers have been targeted. And some people might have entered at this support of 20 moving average, clearly showing some bullishness. But here also you can see how the market couldn't cross this bearish candle, even though the market showed some kind of bullishness and closed above this 200 moving average. You can see following candles clearly broke and targeted all those buyers as well who might have entered here looking at this 21 moving average as well as the 200 moving average, and clearly broke towards the downside. And you can call this as the breakout structure over here, and you can consider this swing, guys. If you consider this high, this common point between this to the common point between this, you can see market face some sort of rejection at this 50 level, the golden zone ratio. This is a golden zone ratio. But another thing you need to keep in mind is that you can see some kind of bullishness, guys. Clearly market forming some sort of shock over here, breaking this high. And if you consider the market with an order block here, you can see clearly the market took support and continued further towards the upside. This is 1-minute order block. And there will be high chances, in case if the market sentiment would have been bullish, that the market would have continued further towards the upside. And you can see the market here also formed some sort of chalk here. And this is the chalk. These are all internal structures, guys. This is external structure. This is happening somewhere between this swing structure, between this high and this low. And if you try to plot the fib levels, the common point between this to the common point between this, you can see price taking support from this 50 level and even trying to break towards the upside. You can see this swing where the market tried to move higher and took support from this 21 moving average as well as this 200 moving average. And the price, look at this candle, guys, it took support all the way here and continued further towards the upside. But you can see this is a very strong support zone, guys. Once if this support zone is being broken, there high chance the market would reverse. So in case if the market sentiment would have been bullish now, guys, you can see how beautifully the price behaved towards the call side, came support midway between this fair value gap, took liquidity over here, continued further towards the upside. and the market took support from this 200 moving average, the day wave up level, the 21 moving average, as well as the 9 moving average support here. This candle which broke towards the upside and and continued very bullish like this, guys. This is how the market usually behaves in case if the market sentiment would have been bullish. But you can see here the market after this kind of momentum towards the upside looks like a fine last sell-off candles, guys. Or as soon as the market was, you could have entered here as a long position expecting the market to go further high, but here you can see the market clearly broke towards the downside with huge momentum, clearly signifying market perspective, market sentiment from being bullish to all the bearish sideways. Till here, guys, even after this impulsive momentum also the market tried to head higher, clearly signifying some sort of bullishness. But as soon as you can see this kind of rejection after this kind of support clearly changed the market perspective from being bullish to bearish. Another one perspective was this bullish candle, guys. You can see sometimes the market might take support from this 21 moving average and continue further towards the buy side. You can see this kind of rejection of price, guys, from 200 moving average as well as 9 moving average. This candle clearly signifying there is a strong support here, but you can see the following candle clearly broke and closed below this level, below this low, guys, clearly signifying that market is trying to target all those buyers and changing the perspective from bullish to actually bearish. Here it shows some kind of sentiment like this, and here also it showed the same sentiment, guys, where price took support here, and in case if the market sentiment would have been bullish, the market would have continued further towards the buy side. But you can see when the market closed below this zone where as soon as the market broke towards the upside and closed suddenly towards the downside, breaking all structures towards the downside and consolidating like this, guys. And when price consolidated something like this below the 9 as well as 21 moving average and 200 moving average and day VWAP level, clearly signifying bearishness, guys. In case as soon as this candle you could have seen trying to break this low, you could have entered short position, or you can see after this consolidation also you could have entered short position, clearly signifying bearish momentum, and you could expect new lows to create. And in case if you try to plot the fib extinction levels, the common point between this, the high between this, because here it's the swing high is black, here also black, and it's also black. In case swing low between this to the swing high between this, look at this, guys, how beautifully the market came all the way to 1.68 level here. This is the 1.68 level. This is the price where you could have targeted. This is the 1.68 level. You could have targeted the 100% move, or you could have targeted the midway between the 100% as well as the 2.68%. Look at this, guys. All the market came all the way to 2.68 level as well. You could have kept another target somewhere here as well. This also sometimes acts as some kind of support, guys. And you can see how the market clearly came all the way to this zone, almost reached this 2.68 level, guys. But in case you wouldn't have exited this trade, or in case if the market after seeing this bullish engulfing pattern over here, you could have exited the trade showing some kind of bullish momentum. Anywhere, guys, when market crosses the above the 21 moving average, you could have exited. Till then you could have still holded on to your trade. You can see this kind of liquidity which I have explained in previous video. This kind of liquidity is always bearish, guys. You can always when you spot after some kind of bearish momentum, the market kind of consolidates like this, or consolidates between like this, there is huge chances the market would continue towards the downside, or consolidates like this above the 9 as well as 21 moving average, the high sentiment, the market might go bullish. And you can see clearly the market broke structure towards the downside. Here you can see the market clearly broke structure, and you can consider the last up move before the down move. And this is the 1 minute order block, and you can see here also the market showed some kind of demand over here, but actually this demand wasn't strong enough to take out this high, clearly showing this demand is not much significant. So if you consider this to be some sort of demand, guys, and this is not an order block because it didn't break any structure towards the upside, you can see clearly the market came again, took support from this demand and clearly broke this high, guys. Now the market showed some kind of bullish momentum. This is the break of structure chop formation, and even market even closed above this zone, clearly showing some kind of bullishness. And if you try to plot the low to high of this candle, you can see the market didn't even reach this 0.38 level, showing signs of very bullishness. So in case if the market would have taken support from 0.38 level, continue further towards the upside. But you can see here, guys, and if you try to plot the fib extinction levels, the common point between this to the common point between this to the high between this to the high between this, You could see you could have targeted the 100% move, but what we need to keep remember in mind is look at this zero point 0.5 as well as zero point 0.6 zone, guys. You should always be careful about this zone because sometimes the market might face some kind of rejection from this zero point 0.5 as well as zero point 0.6 zone. And you can see till here the bullish sentiment is the market sentiment is bullish only, guys. So a lot of buyers might have entered seeing this kind of consolidation above 9 as well as 21 moving average after a chop formation, clearly showing a bullishness. So in case if you might have entered long position, you could have kept and you kept your stop loss just below this consolidation and targeted to 100% of 1.68 level. But you can see here what happened is, guys, this 1 minute order block faced some kind of rejection over here and market easily broke this 1 minute order block. But as soon as after this candle, you can see the market kind of consolidate and formed an engulfing pattern over here. You can see two things that happened here, guys. One thing here is it looks like a last sell-off candle. After this kind of, you can make out this last sell-off candle only after you find when market closes below this bullish candle, guys. When market closed below this candle, clearly changing market sentiment from bearish to bullish, from bullish to bearish, and this looks like a engulfing pattern. You can see the market engulfed the previous candles, showing signs of rejection, and this zero point 0.5 as well as zero point 0.6 zone, guys, clearly showing bearishness. And the market couldn't even cross the zero point 0.5 as well as zero point 0.6 zone and face rejection over here. This is how the market you could have entered after this bearish candle and targeted towards this swing low or anywhere between this zone. And you can see the market clearly broke this structure towards the downside. You could have targeted this low after bearish engulfing candle, guys. This market broke the structure, and if you try to plot the fib extension levels, the fib levels, the common point between this to the common point between this, you can see the market here couldn't even come all the way to 50 level. The market faced some sort of rejection here itself. This is the 0.38 level. And at this level, you can see this bearish engulfing pattern after this consolidation and bullish momentum. You can see how clearly the market consolidated like this. You can see this consolidation, guys, here, the same kind of consolidation like this, where you can channel it as this, like this consolidation. After market didn't even try to break this high also, guys. Market didn't close above this high. Clearly not signifying any sort of bullishness. But if you try to plot these fib levels, the high to low, you can see this is the 50 level where the market tried to form some kind of support. So in case if you try to plot the fib extension levels, the common point between this to the common point between this to the common point between this, you can see the market moved all the way to 100% here, and this is a 100% move here. But as soon as the market reached 100%, you saw a bearish engulfing pattern clearly showing bearishness, and the market continued further towards the downside. And here you can see the market took this fair value gap here, this zone where the market has some kind of liquidity over here. As soon as the market showed some kind of demand here, because of previous demand here, you can see this acted as some kind of demand over here. The market tried to move here, but you can see this kind of sell off after this bearish engulfing pattern. This is engulfing pattern over here. And after this bearish engulfing pattern, which broke towards the downside with a fair value gap over here, this fair value gap was mitigated, guys, clearly showing some sort of mitigation, and market actually broke this low with a breakout structure here. And you can consider this engulfing pattern over here as well as another engulfing pattern, guys. This also is an engulfing pattern. So let's make another engulfing pattern over here, and this fair value gap has been taken. So now the market broke this structure with an order block here. So you can consider this to be a 1 minute order block. So the market broke towards the downside. So if you try to plot the fib levels here, the common point between this to the common point between this to the common point between this, you can see how the market clearly came all the way to 1.68 level here. You could have targeted to this 1.68 level here with after seeing this kind of engulfing pattern, or when you draw this fair value gap, you could have kept your stop loss just above this engulfing pattern and continue towards the downside. This is the 1.68 level, guys, where you could have taken short position. In case for better risk to reward ratio, you could have kept it like this and targeted all the way to this zone. And after this, you can see some kind of piercing pattern and market tried to head higher, faced rejection from this 1 minute order block, and came all the way again to this low itself, or you can consider this demand zone itself. And this is also another demand where the market again came back to this demand. You can see how here also the price acted as some kind of demand. Here also the market acted as some sort of demand, and here also the market acted as some sort of demand. But you can see some kind of bullish momentum, guys, here. And here also you could have taken trade, guys. Look at this, how the market formed some sort of chalk here, clearly breaking this low over here. This is the break of structure towards the downside, where this order block has been mitigated. But here there is no clear order block, guys. You can't clearly place an order block. But in case if you might have placed an order block here, you can consider this to be an order block, the last up candle, or you could consider this candle, guys, this zone to be an order block. But you can see the market took some kind of support here and broke this structure high. You can see broke this order block level towards the upside, and market kind of consolidated between this 200 moving average, the 9 as well as the 21 moving average, guys, clearly showing some kind of bullishness, where this order block level acted as a breaker block now, where market couldn't even close below this zone. You can see how beautifully this low, guys, acted as support here. The same this low, you can see how beautifully the market here acted as some kind of support and continued further towards the upside. So in case if you want to draw the fib extinction levels, the low here to the high there and the low here, you could have targeted the 100% move here, or you could have targeted somewhere midway between this. You could have exited here, guys, looking at this 100% move. After, you can see this kind of rejection also. So you could have targeted all the way to this 100% move. So this was quite unexpected, guys. This momentum, this you couldn't have expected. But in case if you would have clearly maintained risk to reward ratio, you can see some kind of bullish momentum here, and a trend line liquidity over here. And the market broke this 9 as well as 21 moving average towards the upside here, guys. You could have entered long position, keeping your stop loss just below that candle also. This is how you could have trade here itself, guys. In case if you might have seen there is some kind of bullish momentum. As you know, you can see here there is no clear bearishness noise with fair value gaps. All this fair value gaps has been taken out. You can see this fair value gap over here also has been mitigated. And here there was a sort of fair value gap, but you can see this bullish momentum clearly broke towards the upside. And here you can see if you try to draw the fib extension levels, the common point between the high to the common point between this to the common point between this. You can see clearly the market couldn't even make the 100% move, came all the way to this demand zone itself. So in case if you might have taken long position, you could have kept your stop loss just below this 21 moving average and targeted all the way to 100% move. This is one beautiful trade setup, guys. And this was one beautiful trade setup after this engulfing pattern, where you could have taken short position, keeping your stop loss just below that candle frequently, I think, and targeting all the way to this low somewhere here. This was one beautiful trade setup, guys, where you could have taken, and after this kind of broke this structure, you could have taken short position somewhere here, keeping your stop loss just above this and targeting all the way to 1.68 level, guys, or as long as it crossed the 9 as well as 21 moving average. Look at this, guys, how the market has behaved. 1, 2, 3, 4 beautiful trade setups where you could have taken. You could have entered short position here also, but this is not a good risk to reward ratio. But you can see how the market was not clearly bullish. But here you can see you could have captured good momentums, guys. But here also you can see after this engulfing pattern, after this kind of trend line liquidity also, you could have just scalped, guys. You could have easily targeted good decent amount of profit here itself, or you could have exited as you saw this engulfing pattern, or somewhere between this also you could have taken a short scalp. This also you could have taken, guys. Look at this, guys. I think you are able to understand what I say. And once this order block has been mitigated, this order block doesn't show any value here, guys, and that's why you can see this breakout structure towards the downside. And this supply zone, demand zone doesn't show any value. Only demand zone shows value, guys. You can see when you can find multiple touches with no clear breakout structure, acts as a demand. But when you find some breakout structure, that is actually an order block. So order blocks only works one time. And once if that order block has been mitigated, as you can see here, and this doesn't show any significance, and this order block here acted as a breaker block here and continued further towards the buy side. And this is about Nifty 50 trade analysis, guys. I think you are able to understand. And let me add better confluences here, guys, for you to take. And if you use anchor wave up levels, and I will show you how anchor wave up levels will help you. You can see this kind of bullish momentum, guys. You see this bullish engulfing candle, and you can see if you try to take here the same bullish engulfing candle over this anchor wave up level here acted as resistance. Here also it acted as resistance, and the same anchor wave up level here acted as support. Look at this, guys. How clearly and how easy the market here behaved. The same demand over here, the anchor way up level didn't act as any kind of support or resistance here, but here it faced some resistance, here also it faced resistance, and here it acted as demand, clearly showing some kind of bullishness. With this kind of rejection also, you could have taken long position here, acting as support. Here you could have taken short position, or here you could have, after seeing this engulfing pattern over here and this kind of rejection of price from this way up level showing bearishness, you could have taken short position and clearly made a decent amount of profit, guys. I hope you're getting what I'm saying. This is one confluence today which I would like to share for better trading decisions. And let's come to bank nifty trade analysis, guys. And if you look at bank nifty trade analysis in daily time frames, as of Nifty 50, I usually plot the daily in case of rejection and close below that zone. You can consider this and target new lows. You can see the market couldn't even cross the zero point 0.5 as well as zero point 0.6 here. This is a zero point 0.5 as well as this is a 50 or the golden zone ratio over here. And if you look at smaller time frames, you can see the market came all the way to 50 of yesterday's. Even the market here also gapped up, took support from this 200 moving average, and there, in case if the market sentiment would have been bullish, no guys, the market would have daisy gone up with this very strong demand zone over here. And here also in Nifty 50, the market acted as same, took support from this 21 moving average and tried to move further towards the upside, but couldn't cross this VWAP level here and clearly broke towards the downside. So here you can see this breakout structure over here. In spite of this bullish momentum, this bullish engulfing pattern or piercing pattern, and after this momentum also, the market faced some sort of rejection from this anchor VWAP level and the 5-minute zone as well. As this is the mid of the first candle and this is the 5-minute zone. Here the market faced the rejection and continued further towards the downside. And if you try to plot the order block level here, you can see this is the 1-minute order block. Here the market faced some sort of rejection here, came here. This is the 1-minute order block, guys. And this is the pivot levels also, the gray color thing over here. And you can see here the market took some kind of support here. This is usually a very good demand zone, guys. You can see this is yesterday's low, or you can consider it as the demand zone over here, as multi price shows some kind of demand over here. You can see there is multiple touches over here showing some kind of demand, and after this demand the market reacted and closed above this zone, guys. Here you can see this is a chalk formation clearly signifying bullishness. And if you try to plot the fib levels, the common point between this to the common point between this, you can see how the market took support from this 50 level here. This is the fib 50, and as I've already told you, in case after this support over here where the market clearly took support here and continued further upside, here you can see the market clearly broke this 9 as well as 21, the VWAP as well as 200 moving average towards the upside, again retraced back, took support again from this 9, the 9 moving average, 21 moving average, the support, the anchor VWAP level, the day VWAP level as well as the 200 moving average. Look at this support over here, guys. This is a very good sign. There is a huge and a very good momentum over here. Look at this, which clearly signifies bullishness, guys, over here. So in case if you might have targeted the highs, guys, you could have kept the common point between this to the common point between this to the common point between this. But you can see the 0.5 as well as 0.6 zone, guys, where market acted as resistance and price couldn't even cross that level. This is the 1-minute order block. Let's take this up. And here you can see the pivot levels here. This is the mid of the pivot level, the 200 moving average, the first mid of the first candle, the 5-minute zone, the 0.5 as well as 0.6 level. You can see everything is in confluence here for the market to go bearish only, guys. In case if the market sentiment, as I have told you, Nifty would have been bullish, the market took support here and continued, and there would have been huge momentum towards the upside, guys. This is how the market usually behaves. And till here, guys, till this zone, the market sentiment is clearly bullish, showing buyers to enter the market and clearly showing some significance towards the upside, guys. But you could have kept your stop loss just below this candle and targeted towards the upside. But here you can see the market here clearly faced rejection from the 0.5 as well as 0.6 level and continued towards the downside and even broke this structure towards the downside. As you can see, the market easily closed towards the downside. You can consider this to be a chalk. And as in Nifty 50, here also the market kind of consolidated here, guys. You can see here when the market closed and below this swing low here, you can consider the market even broke this low. As soon as the market broke this low, you could have taken short position here itself, guys, keeping your stop loss just above this zone or above this something above this zone only, guys, above this high and targeted to the new lows. But here there was better confluence, guys, where the market kind of consolidated towards this sideways, where price was trading below the 9 as well as 21 moving average, as well as the day VWAP level, as well as the 200 moving average, and below the pivot, days pivot level, and the 1 minute mid of the first candle, as well as 5 minute zone, guys. You can see everything is in confluence here where the price was trading, and you could have entered short position here, guys, expecting the market to go further towards the downside. And you can see how the market clearly came all the way here. And if you try to plot retracement levels, the common point between this to the common point between this is one confluence, guys, where you could have targeted the 2.68 level here, and you can see the market came all the way to 4.26 level. This is how you could have targeted to this low, but you can see how the market came all the way to 2.68 level. This is the 2.68 level, or you could have targeted all the way to this 3.6 level here, or you could have targeted to 4.6 zone here. This is where you could have targeted, guys. Somewhere you could have exited here. The market didn't reach, but you could have exited somewhere here, guys. But let me draw the fib extinction levels instead of fib retracement. If you try to draw the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted all the way to the 3.68 level, the 1.68 level, the this 2.68 level. Anywhere between these zones you could have exited, guys, or you could have tried your stop losses as long as the price moved above this 21 moving average. You can see here after this bullish momentum candle towards the upside, you could have exited your short trades, or you could have exited here, guys. So this was one beautiful setup where you could have taken short position here, keeping your stop loss just above that zone and targeted all the way to here, guys. This is how you could have targeted, showing a very decent amount of profit here. And you can see same as in Nifty 50, the market here formed an order block over here. This is a 1 minute order block where this order block has been mitigated once and it doesn't show any value here. But here you can see some kind of demand over here. This is the demand, and the market clearly formed a chalk here, same as in Nifty 50. Here the market formed a chalk, and if you try to plot the fib levels, the low to the high here, you can see clearly the market took support from the 0.38 level. This is the support, and if you try to plot the fib extinction levels, the low to this high and to this low, you can see how beautifully the market couldn't cross this 50, 0.5 as well as 0.6 zone here and face some sort of rejection and continued further towards the downside. Look at this, guys. This order block has been mitigated. In case if the market sentiment would have been bullish now, guys, how would market behave is that you can see after this kind of demand, the market broke, you could have entered long position, keeping a stop loss just below this zone and targeting towards the upside. The market, in case clearly sentiment would have been bullish, the market would have broken here with huge momentums towards the upside. But you can see here, same as in Nifty 50, as I have already mentioned you that if you consider this candle over here, this looks like an last sell-off candle. Only if price closes below that last sell-off candle low, when this low has been broken towards the downside, you could have entered short position. And before that, you've got another confluence where you can see this is the bullish engulfing pattern, bearish engulfing pattern. This is clearly an engulfing candle, guys. You can see this is an engulfing candle where the price engulfed the previous zone, and when the market broke towards the downside, you could have entered short position and targeted this swing low, or in case if you want to target, you could have gone double, guys, of this swing structure towards the upside. So if you consider this low to this high over here, And if you draw the double of this zone all the way to here, all the way here, you could have somewhere targeted till this low also, guys. This is how you could have done if you consider this zone to this zone here and this zone and this zone, you could have targeted double of that swing. This is how you could have targeted, or you could have easily targeted this swing low, guys, after seeing this bearish candle, or you could have tried as long as the price crossed this 21 moving average here. You can see the market was trading, consolidating between this below this 9 moving average, showing significance. And after this kind of momentum, you could have exited your trade. But in case if you might have missed on to that trade also, you can see clear here also it broke structure, and you can consider this also the market clearly broke structure towards the downside. And if you try to plot the fib levels, the common point within this to the common point to this swing low here, or to this swing low, you can see the market here. You can see the market here faced rejection from 0.5 as well as 0.6 zone here. This is the fib 50 level where the market faced some sort of rejection here. And if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted all the way to 100% move. But here the market didn't reach all the way to 100% here. You can see the market came all the way to 0.7%. And after this bullish engulfing pattern, you could have exited your long position and taking a minimum profit of, you can see this bearish engulfing pattern, guys, as you have seen here also. You can see you could have entered short position here after this bearish engulfing pattern, targeting towards the downside. So after this candle, keeping your stop loss above that candle itself and targeting all the way to here, or after this candle. So let it be like this. This is how you could have targeted after seeing this bullish momentum engulfing this previous candle. You could have exited your short position. Here also it showed some kind of bullish momentum, guys, but it couldn't cross this 21 moving average. It closed, but following candle it broke towards the downside. So you could have just hold on to your trade. And here you can see after this bullish candle, you can see some kind of demand over here. This is the demand zone with no clear break of structure. You can consider this as a chop formation, which market actually broke towards the upside, showing some kind of demand over here. So the market came all the way here and continued further. So here though the market clearly formed a chalk over here. So it actually broke towards this zone with a fair value gap. So you can consider this to be a beautiful chalk. With a good momentum. So if you consider this swing low to swing high, the market came all the way to 50 level over here. This is the 50 and the 21 moving average support as well. You can see how the market took support from this 21 moving average, the 50 level over here. And you can consider this breaker block also. If you consider this order block over here, which actually formed some kind of support. But in case if you see this 21 moving average, this kind of bullish momentum, guys, you could have entered short position, long position here, keeping your stop loss just below that candle. And if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move. You can see the market went all the way to 2.68 level. Look at this, guys, how the market tried above the 9 as well as 21 moving average all the way to 2.68 level. Look at this, guys. What else you need? You can exit it as you could have exited your position as soon as you sign this engulfing pattern over here. This is an engulfing pattern. You could have either exited here also, this engulfing pattern. So this is how, guys, I'm teaching you. This is about Bank Nifty, how the market has behaved. This was one good trade setup. Here also you could have taken after this zone, engulfing zone over here, engulfing candle, taken short position just in case if the market broke above this last sell-off candle. When the market closed, you could have taken short position and targeted this swing lows over here. This is the swing low where you could have targeted, keeping your stop loss just above that zone itself. You can see this was another good trade setup, guys, where you could have taken. And this was a really good setup, trade setup, as you could have gone all the way to 2.68 level. And look at this, guys. Look at this. How the market has behaved. Here was one good setup. Here was another good setup. Here another good setup. Here was another good setup. Look at this, guys. Nifty 50 as well as 50, how the market has behaved with a very good price action. And in case if you want another confluences, you could have used anchor VWAP level. In case if you can see the market face rejection over here and support over here. So in case if you plot it, In case you plot it here, guys, you can see how beautifully the market faced rejection over here, rejection of price here, this anchor VWAP level over here. The price couldn't cross here, and here also it faced some sort of rejection, but here as soon as this closed, the market formed some kind of support and continued further towards the upside. This is what I'm teaching, guys. Sometimes even anchor gap levels also will help you to make trading decisions and help in better confluences whether to take a short or a long position. And in case if you want to take short position, you could have placed an anchor gap here also. And in case if the market, you could have kept your stop loss here itself, guys, after this kind of consolidation, looking at this resistance over this anchor gap level. So you could have tried. This is one better confluence where you could have taken short position also. And if you try to place the anchor view up level here to see if the market closes above this zone with another bullish, as soon as you saw the anchor view up level broke towards the downside following another bullish candle, engulfing pattern here, which shows signs of bullishness, you could have entered long position, and you see this guy's clearly showing bullishness. As soon as it broke anchor wave level towards the downside, it broke towards the upside as well, showing a very good sign of bullishness. This is what I'm teaching you guys. You can see the price took support over here, and the price took support as here as well. This is what I'm teaching you guys. This is how the market behaves. Uh, and hope my trading knowledge is helpful, guys. And coming to Monday's analysis, so in case if you see that these pivot levels will help you guys in case if the market gaps up and targets any of these sellers, or if case if the market gaps down and target all these buyers, there are high chance the market will continue towards the downside, or above these pivot levels and market consolidates above these pivot levels, you can look for upside, guys. See, if you see, this is the tomorrow's pivot level. So in case if the market tomorrow sentiment is bullish, no guys, the market will gap up above these pivot levels and target first the sellers who might have entered here, and market might come somewhere down here, take support here and continue further towards the upside. This is how usually the market behaves in case if the market sentiment would have been bullish. If the market sentiment would be bearish, guys, market will gap down here somewhere targeting any of these buyers who might have entered here. So the market might gap down, the market might gap down here targeting any of these buyers in continued bullishness and can't cross this pivot levels and continue further towards the downside, guys. This is how usually the market will behave in case uh, market sentiment would have been bearish. This is about my pre-market analysis, guys. Hope what I'm teaching is helpful for you to make trading decisions. If you find my videos helpful, guys, leave a comment below, like, share and subscribe. Um, and keep supporting us, guys. Thank you.